情先不懂啊。
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at Dev Connect Day 1 here on the Bessent from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the roll-up.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show. GM. Our Manaton is dialed on the sounds. We got the whole team cranking. We're here. We are here. We've been here every single day through the bear, the pre-bull. We're going to be here every single day going forward. We get after it for you guys. Welcome August 25th. It's Tuesday. We're rocking out with you guys. I'm here in Rollup headquarters south in sunny South Florida, and the bull market continues. Today is the day of the Zcash ETF, and we got the man, the myth himself, Grayscale, Zach Pandl, going to be talking to us about the Zcash ETF from Grayscale. Also, big announcement from Aerodrome yesterday on tokenized stocks out of Coinbase. These guys are the primary venue to trade tokenized stocks from Coinbase. We're going to be talking to Alex Cutler of Aerodrome about this as well. Fantastic show as always for you guys, as always. Also, shout out to Plume. These guys sponsor Rollup headquarters north up in New York City. We got a couple members of the team out there in the Empire State Building today. So we are absolutely rocking and rolling with you guys. Hit us up in the chat. Are you a believer? I like this. I'm seeing all kinds of bull market abbreviations and lingo here. We got some new names in the chat too. NFT Art World, good to see you. TP Sauce is a big Zcash bull. We appreciate you guys rocking with us. We are Zelievers in Z Hyperliquid, ZE Hyper, and a couple others part of that as well. So we are absolutely moving and grooving today. Couldn't do it without you guys. Absolute pleasure to be with you. And we're going to be with you guys every day. The bull market continues. So we're going to get into today's show. Absolute tremendous show as always. Here's today's topics. You guys can see, as always, markets and weather. Brought to you from Florida today. And then we're going to get into it. Dromos Labs, you guys know him as Alex Cutler from Aerodrome. Grayscale's head of research, that's Zach Pandl. And then we've got Codex's CEO going to talk to us about stablecoins, and that is Haonan Leap. So can't talk about it enough. I mean, I'm excited. Should be a great show. We are fresh off a monster rip. Plenty happening in the macro world. And as always, plenty happening in the digital assets world as well. You guys know that we've got a portfolio construction thesis that we're going to be talking about today and always on today's show. We're going to be sharing that with you guys so that you have the right thesis for outperformance. That's where we're at these days, and that is what we're going to stick to. And so let's get into it. We have a tremendous show for you guys as always. Let's go ahead and kick it off. First, let me tell you guys about Denari. Denari is our tokenized equities partner, and we know that tokenized equities are coming in force, $100 trillion asset class. So many providers are now entering this market, which is exciting to see because ultimately this is going to be competition at the highest level for the highest asset classes, and we're going to see what all of these guys are made of. So big shout out to Denari helping out the tokenized equities world. Bit cloudy, 88 degrees, and we're going to see a little bit more sun as we round out the summer. They're calling it the bull market summer, the golden summer, and the golden cycle. And we're going to continue to see as this rages on. We know that there's a confluence of factors here, the macro liquidity environment, the legitimization of the crypto industry, among other factors. And we're going to continue and provide you guys with everything that you need to know to outperform in this market. Let's keep it chugging along as well with Frax. Frax is our stablecoin partner for the show. And these guys are open, stable, and borderless, helping you guys with lines of credit on chain. And so if you're a provider, if you're a partner, and you're looking for some access to stablecoins, maybe you're a payments business or a neobank business, and you hold a lot of deposits, you have a lot of cash, I'm sure you're thinking about stablecoins. Frax is one of the few stablecoins that the industry treats as money. Don't need to swap out, can sit in them. It's Genius compatible, and they are front running the Genius Act and all the rules that are coming out of it. They're ahead of the curve there. We've got our stablecoin stabled up segment a little bit later this week. Markets powered by ZAMA. Little pullback. You know, this is attributable to a couple different factors. I mean, Stanley Druckenmiller, which was the boss of both Treasury Secretary Bessent and Fed Chairman Warsh, came out and was kind of against Bessent's policies of these treasury buybacks. I think that could be why we're seeing this. We'll see. Tell me what you guys think in the chat. Do you think we're going to continue? And we're gonna see this thing rage on. It feels like the train has left the station, honestly. This might be the pullback that everyone's been waiting for. I think a lot of people were sidelined, and now they're coming in and they're looking at these opportunities here, and they're realizing that dips are for buying. So there's a couple different factors that we're going to be tracking. Obviously, you guys know our portfolio construction thesis is that of the barbell. We've got hard assets on one side, and we've got the revenue meta on the other side. Hard assets being those assets with monetary premium, scarce assets, Bitcoin, Zcash, gold, which you can now trade on these perps exchanges on chain, as well as maybe a little bit of Ethereum in there. I was chatting with my clanker this morning about the correct portfolio construction thesis and distribution. And I came up with something like 40% Bitcoin, 40% Zcash, 10% gold, 10% ETH. I think that's maybe a little bit underweight ETH, but that's kind of what I'm looking at on the monetary premium side of things. And then on the other side, the revenue assets, the revenue meta bucket, we've got, several assets that fit the bill and increasingly more assets that are trying to join that party. Several on this list here, Near and Chainlink, obviously. Hyperliquid, Lighter, and VVV, Venice, are all leading the charge on the revenue bucket as well. Aerodrome fits into that thesis. EtherFi, Athena, Sky and Athena being part of the stablecoin build out also fit the revenue meta. And Akash on the AI side, I was looking into because they have a program that basically turns compute into value accrual. And then you've got a couple others, fake world assets, also a little bit smaller of a market cap, but also fits that revenue thesis. And so there's several coins that you can put into this revenue meta. The exact disbursement of tokens across the revenue bucket is, definitely up to interpretation, but this is the way that we're seeing these things play out. This bifurcation, you've got an institutional bid on hard assets as a result of accommodative monetary policy and the liquidity buybacks that Bessent is signaling in the bond market. Ultimately, that will find its way into digital assets, specifically digital assets with monetary premium, Bitcoin, Zcash, gold, ETH. On the other side, the revenue meta, we do believe, is in a position where, these companies, on-chain businesses will start to compete with equities. And some of the fastest growing companies are available and accruing value to their tokens. So this is what we're watching. This is the barbell. This is the monetary premium and the revenue meta. And, there's plenty to discuss within each of these segments. As always, markets powered by ZAMA, these guys leading on the privacy side of things, which we're going to be talking a little bit more about today with Zach Pandl as we get into the conversation around Zcash and how the AI surveillance is continuing. Zcash is the answer to the AI surveillance build out. Before we get into our news and our headlines, guys, I want to tell you about our AI partner. You see them on this chart. You guys know them well. It's Near. Okay, Near is part of the revenue meta as well as the AI and privacy narratives. We believe that within this broad revenue meta, this broad legitimization of the industry, we're going to continue to see segmentation and a maturity of this market as it develops. We think that is going to accrue in a variety of segments, AI and privacy being a primary benefactor of them, stablecoins, another segment, perpetuals, another segment from there. And so we're going to continue to discuss this, but Near is at the heart of this build out that we're continuing to see. Guys, we've got some headlines. We're going to see some funny ones, and then we're going to get into some more serious ones before we bring up our first guest. And so we're going to get into it. Let's go ahead. Michael Saylor is now up about $4 billion. This guy is now just trolling. This guy is like the biggest troll. So we're going to go ahead, watch this video, have a little laugh, and see what's going on. Wow is right. I mean, what is going on here? I mean, I'll tell you exactly what's going on. It's Michael Saylor up $4 billion after everyone called him out for crushing the industry. We weren't going to go higher until Michael Saylor got liquidated. Well, he didn't get liquidated, but he did capitulate a little bit. He sold a bit of his Bitcoin position at the lows, shored up the market a little bit. I mean, that's for sure. I think everyone sort of overcoming the Michael Saylor FUD was an important bottom formation. Obviously, it wasn't what, sent us exploding off the lows, but it did help solidify that, this is not a systemic risk to the industry. This guy's got enough cash. His stretch product is pretty much allowed to exist in the eyes of the market, and it's not going to take things down with it. And so Michael Saylor is now celebrating that he's got an unrealized profit here. He's rebounding, and man, this is just, I think we're going to see a lot more of this. And then we're going to see a lot more Michael Saylor troll bull posting AI generated videos. So that's my take on that. Let's keep going. We want to cover some more of these headlines. Obviously, you guys know about this Zcash ETF that went live. Tell me what you guys think about this headline, this tweet. Barry Silbert launched this Zcash trust quite a while ago. Now he's launching this ETF. And so this was a very similar construction of some of his other trusts. This was before there was broad SEC approval in order for this ETF structure to go live. The construction of these assets that someone could get exposure to on the public markets was in the form of a trust, and it had very, very strict redemption rules. It was much more difficult to redeem and sell versus an ETF. And so now what's going on, because there is much friendlier ETF rules out of the SEC, Barry has converted a lot of these trust products into ETFs. He did this with Bitcoin, and now he's doing it with Zcash. And so this is kind of what we're seeing. And the question that we have is, how will the Zcash ETF react? Is this something that we think is going to react similarly to the Bitcoin one, where, people were locked into this trust. They ended up being up so much because they couldn't redeem. Now they have a liquidity venue. If they have so much that they can liquidate and still be kind of playing with house money, then we could see an initial, shock to the Zcash market as a result of, people exiting those positions that they've been locked into for a long time now with this ETF venue. Or do we think the demand is going to be so high from outside buyers that this is going to absorb all of that latent capital and ultimately send the market higher? I don't know, but I want to hear from you guys. I want to hear about whether or not you guys think the ETF is going to be a bullish event. And so tell me in the chat what you guys think. And then we're going to hear from Grayscale, Zach Pandl, on what his expectations for the Zcash ETF are. And so this is, a pending thesis. We're going to see how it plays out. I think the Zcash ETF is live as of our show right now. And so Zcash did retrace a little bit. It is holding that 800 level, which is good to see. And, the market broadly retraced a little bit. Hyperliquid looks good, pushing all-time highs. Fake world assets also looks good. So we're keeping track. Buzzards Bay says ETF is bullish, but the saying, sell the news event. So we're going to see. It all depends on the flows. And I think we're going to keep a close eye on the flows over the next couple of days. So let's keep going. Hyperliquid Strategies is TWAPing again for the first time since June 21st. Andy, I see you in the chat. Thank you for using the full name. Dubious Rational, you guys rock. Great show every time. Wow. Cheers to you, Dubious. Cheersing you with a little coffee here. And Bob Diamond is so back. And so we are finally getting Hyperliquid Strategies, smashing the ATM, using it to TWAP hype, and then ultimately have that hype. Hype goes up, they slam the ATM again. And so this is what we're doing. The digital asset treasuries are back. There's very, very few that executed this perfectly. Got to say, strategy and Michael Saylor actually did relatively well given the broad market conditions, but you got to give it up for Joseph Shalom. Joe Lubin, Tom Lee on the ETH side, and then Bob Diamond and David Seamus on the Hyperliquid side could not have done a better job buying all the way through the lows, buying all the way to the bottom, averaging down, average cost entry, just sweeping the lows. And now Hyperliquid goes up, ETH goes up. These guys are able to smash the ATM, right? Sell some shares, use that cash from selling those shares to go and buy the asset back, take more ownership of the network. And that's exactly what we're seeing Hyperliquid Strategies and the Ethereum treasury companies doing. And so this is the reality. Hyperliquid Strategies and ETH treasury companies are back in profit. Their MNAVs are back above 1, and they are doing the same strategy that we always knew that they would be doing, which is slamming the ATM and recycling those profits back into the underlying asset that we all know and love. So big shout out Hyperliquid Strategies. I've still got my position. Got a screenshot from Andy just a little while ago. I think he is still in his position as well. Big shout out to Andy for sticking with it through the lows. I mean, hell of a drawdown there, but we are so back. Okay, let's keep going. Got a couple more tweets before we move into our first guest, which is going to be Alex Cutler from Aerodrome. He's getting ready in the back. We're going to bring him up in just a moment or two. But I wanted to show you guys, this is exactly what the portfolio construction needs, okay? It needs analytics and it needs metrics around which tokens are accruing value to their token, okay? Alex Cutler, who's going to join us in a moment, is an expert on this. And we know that there's a hard asset, scarce money thesis on the one side of the barbell, right? And this is specifically benefiting from the accommodative monetary policy as the Treasury Secretary and the Fed turn on the money printer. We know that Bitcoin, Zcash, gold are going to do extremely well, but we don't want to just stop there. There are on-chain businesses that are poised to do extraordinarily well on the other side of the barbell according to the fundamentals, okay? And it's the companies that show up in this chart. This one's from DeFi Llama, great data from DeFi Llama as always. And this is measuring holders' revenue, okay? And this is dominated by Hyperliquid, which you can see on the left side of this, right? Which is the big blue square there. And then you've got some more here, right? You've got Pump, you've got Aerodrome that round out the top 3. And then you've got some smaller squares, but this is the revenue meta. This is the market map of the other side of the barbell. Okay. These are companies, on-chain businesses with product market fit, generating revenue and driving that value into the token. Okay. What is the thesis here? What is the valuation heuristic? Okay. Well, got to have revenue, got to be driving that revenue to the token, and then got to have more value to the token than emissions unlocks or incentives that are flowing out of the token. We've got to offset any of the expense side, and we've got to overcome that with value and revenue flowing into the token. And what I love about this is, typically and traditionally this has been done, the value accrual has been done with buybacks, and that's okay. And the reason for that is because there just hasn't really been a regulatory framework that gives us clearance for value accrual that isn't buybacks. There was securities laws that implicated direct dividends. We know Gensler is now out, but a lot of companies adopted the buyback model in his place, right? According to the rules that we had at the time. Now the regime is shifting. Now we're in a friendlier regulatory environment that is okay with a little bit more experimentation. And so we're seeing some new models. And I'm seeing Sky. If we flip back to the chart here, Sky's on here. I know EtherFi's on here. I know there are more mechanisms that are being experimented with that we haven't seen and are not just pure vanilla buybacks. And that's what I think is very exciting, is that we're getting financial experimentation. These are the on-chain businesses that are generating revenue and passing it back to the token. And we know this because this is not just revenue, this is holders revenue. Okay. And this is value accrued to the token. I'd actually like to dive into the mechanism or the metric of holders revenue a little bit deeper, because I don't know exactly how it's calculated, but we will dive in and we will get a better understanding of how these things are calculated. And ultimately, this is the other side of the barbell. And the reason being is that if we do get this bull steepening of the bond curve, this liquidity environment becomes extremely accommodative, they're going to run the economy hot. That's what they're attempting to do. We don't know if it's going to work just yet, but if we do get cooperation from Warsh and the Fed, they're going to run the economy hot, and that means high inflation, that means equities do well, and it means hard money does well as people try to curb that inflation, but also benefit from owning assets, okay? Equities and hard money alike. And so it makes sense, right, to have exposure, at least in my mind. I'm going to have exposure to both sides of this barbell because I know both of these are going to do well. We don't know exactly which one is going to outperform. And so we can put together this basket of assets that are in a position to do extraordinarily well, no matter what is happening, no matter what is outperforming. These things will ultimately leapfrog and go hand in hand together as the bull market continues. And so this is what I'm extremely excited about from a portfolio construction thesis perspective. These are the assets that I'm looking at on the revenue meta side of the barbell. On the other side, we know it's hard money, scarce assets, Bitcoin, Zcash, gold, and ETH. Let's keep going. We've got a couple more. Why don't we do a quick daily equity, and then we'll get into that'll set us up nicely for Alex Cutler of Aerodrome. First, let me tell you guys about 1inch. These guys are in a position to do extraordinarily well as a result of the RWA build out. As a liquidity aggregator and a shared liquidity protocol, 1inch Aqua is their new product. And this is technology that's compatible with essentially all kinds of assets, right? And so typically what we've seen is that, these liquidity protocols have primarily been used for crypto native assets, but that's no more. I mean, there could be a time and a point in time in which the trading volume on chain across both centralized exchanges, decentralized exchanges, perps, spot, AMMs, everything is actually overshadowed by RWAs, including tokenized equities. We saw it happen on Hyperliquid. We could see it happen on chain as well. So let's keep going. We've got daily equity coming up next. Let's go ahead, play. All right, this is the context for daily equity today and what I think is going to set the stage for the tokenized equities build out going forward, right? This is a $100 trillion asset class. We know that this has the potential to overshadow crypto trading. This is sort of what, blockchain protocols have been waiting for years, because this is an asset class that is tried and true. It's proven, it's got real fundamentals, but now we're upgrading the technology, the fintech, financial technology that this thing is traded on. And it's happening now with tokenization on blockchain rails. And so with the Coinbase announcement of tokenized equities, obviously this is daily equity powered by Denari, Coinbase is entering the game, and they're doing so with tokenized equities. And this is something I find extremely compelling because those who are trading this asset class, as long as we get the security principles and the trust principles correct, and that means shareholder rights, governance rights, owning a tokenized share of a company is equivalent to owning a typical traditional equity in a brokerage account. As long as we can get those material principles right, the trader is going to go where they can get the best price. They can get the best bang for their buck, and you get 24/7, so it's faster. If it's more affordable to do this trading on chain, we're going to see a mass migration of trading volume from brokerage accounts to on-chain AMMs and liquidity protocols. And that's exactly what Eric is talking about in his tweet here. He says Base serves about 32 cents of a fee versus interactive brokers. Base serves about 97 cents versus interactive brokers fixed, which means that Base is serving extremely competitive rates, okay, on tokenized equities on chain. This is going to be flowing through AMMs like Aerodrome, which we're going to be speaking to in a moment. But the point is that if we can get into a position where we get price discovery for $100 trillion asset classes like equities, and this price discovery starts to happen on chain, the entire industry flips on its head, because then you end up with the dog wagging the tail. Right now, the dog is happening off chain. It's happening brokerage accounts, and it's wagging the tail of the tokenized equities because off-chain brokerages are just so much larger, and that's where price discovery happens. But if that flips, then we're going to get the bulk of trading activity in the largest asset class in the world. The US equities market is going to happen on chain, on blockchain rails. And that is a massive addressable market for all of these DeFi protocols. And we've seen extremely creative use cases that are now just starting to come out and just starting to develop on chain as a result of this asset class getting tokenized. So extremely, extremely exciting to see. We're now seeing price discovery become competitive between Base and off-chain brokerage. And this is just the beginning. This is still extremely early. So I'm excited to speak with our first guest, Alex Cutler of Aerodrome, on exactly this. Let's go ahead and get him ready in the back, because I think he's ready. And we're going to be talking about this. We can go solo for a moment. We're going to end our daily equity segment with that. And we're going to get into it. Guys, tell me what you want to hear from our friend Alex Cutler, because we're going to bring him in and we're going to bring him up on stage. Let's get into it. Let's get into it. Because, guys, Alex Cutler, he's the CEO of Dromos Labs. Okay. And Dromos Labs is the labs corporation behind Aero. Remember, Aero is the combination of Aerodrome and Velodrome. These guys have market dominance on Base. Okay. They are the Base top decentralized exchange. Velodrome also happens to be the top decentralized exchange in Optimism. Okay. Base is one of the leading chains when it comes to trading volume. And now they're getting the influx of tokenized equities, right? And so just remember the thesis as we get Alex ready in the back. Remember the thesis is that the tokenization super cycle continues, right? We're now approaching this $100 trillion asset class of tokenized equities, right? The idea is that doesn't just stop there, right? Once these things are tokenized, they move on chain, and the idea is they become productive assets. They become programmable in smart contracts. These assets, the $100 trillion of new value on chain, ends up flowing into the DeFi primitives. And these things are totally compatible because these are ERC20 tokens, right? We already have the infrastructure built for crypto native assets. And we've seen what can happen once we get a robust RWA and equity ecosystem available on chain. And we've seen it happen specifically on Hyperliquid, right? We've seen how the RWA assets, the trading activities actually flipped crypto native assets. And so it's a question now of, will that happen not just on Hyperliquid, but broadly across the entire on-chain ecosystem? I think it's certainly possible. I think we got Alex ready in the back, so let's go ahead and bring him up because I want to get his take on this. And I want to start by congratulating him on the partnership with Coinbase. Obviously, Aerodrome is the go-to exchange, the decentralized exchange for Base. The leading one in volume there. And so it just makes sense that now with Coinbase's announcement around tokenized equities, a lot of that trading activity will flow into Aerodrome. Alex, you're on stage now. Welcome back and congratulations, man.
Thank you. No, these are, unbelievably exciting times. I think the last time I was up there in the tokenization tower and we were talking about exactly this, that we've been building infrastructure for years to build the, most robust, most accessible, most dynamic market that has ever existed in history. And we're going to do that on chain, right? Not just with this amazing assortment of digital assets that we've seen to date, but by bringing on, as you were saying, $1 trillion markets in global FX, in tokenized stocks, in real world assets, and making these things fully programmable, permissionless, composable, and capturing the network effects. And so we're so excited, right, to be serving as the primary liquidity layer for Coinbase tokenized stocks. We've been working with them on this for most of this year. So it's, I think, really incredible to finally see it real and in the market. And I can just tell you that, I think we're just about at the 24-hour mark right now since these things went live. And the early results here are overwhelming, right? It's blown past all expectations that I think we had for day one, all the expectations that Coinbase had for day one. But this really is just the start. I mean, we've got 4 assets live today. We know that already in these first 24 hours, we're delivering some of the best execution you could possibly get on these assets across any spot exchange or any issuer anywhere on chain. And the crazy thing is that we've even seen indications that we are beating the execution that you can get on something like IB today, right? Which is the main resource for many folks trying to access these types of assets in traditional systems all over the world. So that's what we came here to do, right? We came here to build systems, better systems that are free of these intermediaries, that make the very active market making totally open and permissionless. And I think we're seeing the beginning of a whole new era here.
Yeah, and one of the things that I think we'll get to is how many people are now building on top. And I think that's something that's very exciting because, when you have an equity in a brokerage account, sure, that's great. You get exposure to the asset, the company's got good fundamentals, sure. But making that asset that has strong fundamentals, like a Google or, an NVIDIA or one of the assets that Coinbase has tokenized, making that available on chain makes it programmable and it makes it productive. And I think there's all kinds of exciting use cases that people are now starting to think about, starting to get creative with about, swapping and earning and lending and building on top. What is there anything that you're seeing? Could you give us a sense of what you've seen over the last 24 hours? What did you expect? And you mentioned, your expectations have been exceeded. What have you seen over the last 24 hours?
Yeah, I mean, I think the first thing is you're right to identify that the future is going to be, these are basically programmable stocks, right? And they are composable, and we will see play out over the coming months. New and novel things that people are building on top of it. But you can just be excited, I think, alone in thinking about the fact that in having these types of assets in permissionless AMMs and spot markets, you give everybody the opportunity to be Citadel, right? You give everyone the opportunity to interact with assets at 24/7, 365, almost anywhere in the world at any given time. And this is the vision of these on-chain systems, is to create access, to remove these intermediaries, to redistribute all the value it creates to all of the participants. And so we're incredibly excited about that. But I'll give you just one example of something we saw that we're very excited about. And because it was actually happening on Sunday prior to the announcement, right? And on Sunday, across AMMs, Aerodrome was quietly doing more volume on these top assets, right, than some of these other exchanges and other issuers were doing, despite the fact we hadn't even announced it's live, right? And that is because, of course, Aerodrome's very great at bootstrapping liquidity. And of course, that these assets don't look like the versions that we've seen to date. These aren't synthetic, they aren't wrappers, they aren't derivatives. These are one-to-one, very much the underlying thing with all the beneficial ownership. But the crazy thing is, over the weekend, we saw millions of volume being traded on tokenized NVIDIA. And we saw a price divergence, right, between the close of the market on Friday and, where the on-chain markets, which were basically engaging in the act of price discovery for NVIDIA over the weekend. And it diverged, I think somewhere between 1 or 2% between the market close price and what was happening on chain. Now, why do you think that is? The other assets were basically, Apple, Meta, and otherwise were pretty close to the market close. But why was NVIDIA diverging? Well, NVIDIA has earnings coming up this week.
Yeah.
So if you spent your weekend researching, thinking about your own personal thesis on those earnings or where the market was going to open Monday, maybe you're willing to go out and buy NVIDIA at the price that is currently trading on chain. And this is the promise of these on-chain markets, right? Is that traditional markets, they run at bankers' hours, right? They're only open for about a third of the week. And these on-chain markets, they will trade 24/7, 365, and they will give participants the ability to basically engage in those acts of market making, of price discovery. And we think as the volume continues to grow as the liquidity continues to deepen, this is like something people will be following very closely. Like I would be interested when the markets close on Wednesday and NVIDIA, goes out and has their earnings call. You should just pull up the chart on Aerodrome of NVIDIA to see how it's trading, because that is going to be the venue in which people are going to be speculating on those earnings and things like that. So that's the future we see. And it's incredible that it's already happening. And it's also incredible that on day one, Aerodrome is delivering the best execution you can get on chain for many of these assets and some of the highest volumes on them. And we haven't really even turned on the gas yet. So it's going to be pretty exciting in the next few weeks.
Yeah, it certainly is. And I think it's some of the best execution on chain and off chain, which I think honestly caught me by surprise a little bit. I fully understand the 24/7 nature of these things, right? The market closes, it's maybe 21.5 or less, right? And so on the weekends, after hours, on chain makes complete sense that you're gonna, sort of lead price discovery during those hours. But for the execution, the pricing of these assets to actually be more liquid and at more competitive prices, even during market hours, I think was maybe we would get there one day, but to do that on day one, I think is extraordinary. And so, given that this is the case, I think a lot of people might be, looking at their brokerage and learning about this and now realizing, wait, I can go get better execution on chain at this venue. What do you say to those people, the people that are just now discovering Aerodrome? How have you been able to coordinate liquidity such that it is more liquid and at more competitive prices on chain than some off-chain brokerage venues?
Yeah. So, I think this is the secret sauce of Aerodrome and, has been core to us becoming, one of the top decentralized exchanges in the world and taking this sort of dominant position. AMMs to date, right, have primarily been self-organizing marketplaces. You're basically connecting together folks who will bring the liquidity. Liquidity is king, right, for any exchange, traditional or otherwise, to people who want to trade those assets, and you are facilitating the exchange of value between those two parties. Aerodrome introduced the idea of a coordinated marketplace, and a coordinated marketplace allows participants, right, by adding this group of the token holders who can allocate capital to markets to help bootstrap them even ahead of that demand being created. So the great case study we have here, which I think is a great teaser for what I think is coming here with Coinbase tokenized stocks, is that, for most of the history of DeFi, the top traded asset has, of course, been Bitcoin. And the venue for that was mainnet Ethereum, and the asset was WBTC, wrapped Bitcoin. And when Coinbase came to us a few years back and they said, hey, we are going to launch this new version of wrapped Bitcoin called CBBTC. And what we need to do, right, is we need to facilitate the growth of a lot of liquidity around this. And we think if we build enough liquidity, we will give the best execution on Bitcoin anywhere on chain. And that'll create, of course, more volume. That'll create more fees. That will create a growth flywheel. It took us, in working with Coinbase here, just about 1 week before Aerodrome and Base were now the top venue for trading the top digital asset. And that level of dominance has only expanded, right? Aerodrome, most weeks now, does more volume on Bitcoin than any other decentralized exchange combined on any network. And that is a claim to fame that we also have around another very important growth vertical, which is tokenized FX exchange, right? Between EURC, USDC. We host the single biggest FX market anywhere on chain. And most weeks this year, right, we have done more volume there than all the other exchanges combined. So I think when people think about what's the advantage here, right, we can attract liquidity into these new markets, right, around tokenized stocks or any RWA asset. If we've got the best depth on those, that's going to be the venue in which people trade them, right? That's going to be the place where if you want to exchange between these things, you participate. You're certainly not going to go somewhere where you're going to lose as much on, slippage or execution as you might on a traditional brokerage, right? That's not what we came here on chain to do. And so I think what people should be like very excited about is that we've got 4 of these live today. And my expectation would be very, very soon, we will have a lot more of these. And that whether or not you are coming on chain to trade, amazing new digital assets, core DeFi blue chips, on-chain FX, or these tokenized stocks, we will be the venue that will give you the best execution on these assets. And that will be 24/7, 365. And by the way, the one big difference here, right, between a perps market is it's not just trading that's available to you. You can engage in the very act of market making. And like one way to think about concentrated liquidity, right, which is something that I think if you're not deep in the weeds of on-chain market making might be confusing, but it is in many ways like an on-chain order book. You can position your liquidity, right, either on the buy side or sell side of any given moment, and you can help make those markets. And then, as the price moves, it maybe comes into either side of your bid, just like an order book. Now, you can't do that on a centralized exchange unless you're, are basically a institution or a market making firm. You certainly can't do that in the TradFi world unless you're accredited. This gives that same access, that gives you the ability to play the role of Citadel, no matter who you are, no matter where you're from, no matter what you're bringing to bear. And I think that's the full stack, right? And that's why you open this question of like, well, yeah, Hyperliquid has done a lot of this, right, in perpetual markets. But spot markets will do the same thing. And that is why we have been laser focused on becoming, basically the Hyperliquid of spot markets and dominating EVM.
Alex, I think I know what you're going to be for. You're going to be Ken Griffin for Halloween this year because you're bringing the barrier to entry for anyone to be Citadel, anyone to be Ken Griffin, much lower, opening access, which is fantastic. It's one of the ethos of this industry. Before you hopped on, we were just talking about one of the thesis that we have that we're kind of moving forward with for this cycle, which is the revenue meta. And you're familiar with this. Part of that is the legitimization of this industry. It is the tokenization super cycle. It's the fact that we're tokenizing these equities. These equities come on chain and they flow into the DeFi protocols such as Aerodrome, and everything gets re-rated because this is a much larger TAM than we've been projecting for this industry for a long time. Some people have had it in mind, and that's what keeps them around and not pivot to AI. And other people lose sight of that. And so given that now we have, not just 4, but we expect several, like lots more tokenized equities coming on. This is a $100 trillion asset class. What do you anticipate this is going to do for Aerodrome and the industry at large as we increase the available assets that are available on chain? And obviously tying in, more assets means more activity, means more volume, means more revenue, means more revenue meta and value accrual to the tokens in this bucket. Can you just help walk us through the mental model of how we should be thinking about this progression going forward?
Yeah. I mean, this comes back to a core thesis that we've held, basically since day one. And, if you're not familiar with us, we started as 5 guys, in a Discord, mainly Anon, and we never raised any money. We never sold any tokens, right? And we sort of scrappy approached our scaling up, right, to now being one of the largest decentralized exchanges in the world, on the verge of launching our all-new Aero, our latest DEX operating system, and going for the #1 most dominant spot in our expansion to chains like Ethereum and Circle's Arc. But our thesis has been that the biggest prize out there on-chain is on-chain spot markets. And you don't need to take our word for it, right? You can just look at last year in 2025, outside of stablecoins, more fees were created via on-chain dexes, on-chain spot markets, about 5 billion, than almost any other chain in the any other vertical in the on-chain economy, right? I think derivatives did about 3 billion, chains did, 2 or 3 or something like that. Lending did even less than that. So this for us has always looked like the biggest prize. And so far we've been servicing, about 5 to 10% of the total addressable market of these on-chain spot markets. So we thought that the biggest prize was capturing that TAM, even if you didn't think about tokenization, right? Even if it was just the pie that we had available to us today. If you add on top that's not only the biggest prize on chain, plus on-chain FX is going to grow significantly. And we're very excited about what Circle will be doing with ARC and us growing our already existing dominance of on-chain FX markets. If you think about the growth of on-chain stocks, like we are seeing with tokenized stocks on Base, that it's not just going to be that we're going to be able to capture and redistribute more of the value of this $5 billion pie, but this $5 billion pie is going to look tiny compared to what it will look like in a few years. And like I like to say, or call back to something Brian Armstrong said during our earnings call last year. You know, Coinbase has been very, very focused, right, on being sure that they were going to win in the on-chain economy. They created this beautiful, this elegant, vertically integrated stack from Coinbase down through Base through to the Base ecosystem. Why have they remained so laser focused on that? Well, their thesis is that in the next 5 years, 10% of global GDP will come on chain. I remember when I started saying this, maybe 6 or 8 months ago in the depths of the bear, I would see some eyes roll, right? And I would see some, that's very bullish of you, Alex, but it's kind of hard to see right now. But, if in one day and in one weekend, before we even go out and announce the product, we can have a shot across the bow of, one of the biggest international brokerages and the execution we can provide to customers. And we're seeing folks like Bitwise begin to introduce like products built on top of these. Right. I think it's going to happen so much faster than people expect, because fundamentally all we are talking about here is the same thing that's driven every technological revolution to date. Computers were just better than the analog components. The internet created larger network effects than traditional ways of distributing and collaborating and all that sort of stuff. The on-chain world and all the infrastructure we've built, from the chains to the exchanges, it's just a better product. It's just better technology. It's better for all the users because it's free of all these intermediaries and you can redistribute all the value. It's 24/7. It's 365. It's globally accessible. And, if you had any doubt about this, just look at all the folks who were so critical of our industry for so long. The major banks, the major institutions who are now rushing to play catch up here. And, I think on the last one I said this, when you think about an exchange like Aerodrome, certainly we've got a competitive dynamic with other exchanges on chain, with different models and things like that. But the ultimate goal, right, is for us to compete with the exchanges of the world, the NASDAQs, the New York Stock Exchanges, and things like that. Because how can you compete with distilling institutional level scale into code and redistributing all the value of that to the participants? I don't think you can. And that's how I think we win as Aerodrome. But I also think that's how we as an industry win against some of the biggest, most well-entrenched incumbents that history has ever seen.
Yeah. That's extremely well said. And 10% of GDP, I think, is becoming a little bit more rational in, people's eyes as this industry develops and it gets recognized and legitimized, by the powers that be. And, I got to say, those institutions, we saw, the president of International Continental Exchange, the president of NASDAQ. These guys look like they're kind of on their heels. They're kind of reacting to what's out there and what they now sense is coming to them. Do you anticipate, these guys are going to kind of go quietly into the good night, or are they gonna? I take it they're gonna put up a fight, and I'm just curious how you anticipate going toe to toe with the likes of NASDAQ and New York Stock Exchange.
It's a great question, and yeah, I saw something last week, right, as we were preparing for the big launch, where NASDAQ was talking about, putting a proposal forward to get trading 24/7. I don't think there's much of a coincidence here that they're suddenly on their back foot trying to react and to bring something that, at least on one dimension, might be comparable. I think it will absolutely be a fight. I think, of course, there are very entrenched interests, very interested in maintaining the status quo. But I spent a number of years, about 6 years, working at Apple, and the thing that I always think about with this sort of disruption coming down the chain is when Steve Jobs announced the iPhone, which turned out to be one of the single most disruptive technology innovations, certainly of my lifetime. Steve Ballmer, the CEO at that time of Microsoft, has this classic clip where he's just laughing it off, saying, who would ever want this thing? There's no keyboard. It's too expensive. It's all of that. And the rest is basically history, right? The iPhone took over the world. Smartphones took over the world, and they largely look and act, just like iPhones. And so these institutions will absolutely try to play catch up. But unless they can remove all of the friction that we can do right now, just by shipping some immutable code, unless they can remove all the intermediaries, which, by the way, in many cases, they are the intermediaries, so they'd have to remove themselves, unless they can make it globally accessible 24/7, fast and cheap, unless they can give, permissionless access to a network of on-chain market makers from all over the world, they aren't going to be able to compete. It's like, the horse and buggy was never going to compete with the automobile. And what we've got here is, I think, not just an automobile, but, like a supercar, man. So it's going to be a fight. But I think a lot of these folks might pivot, right? They might pivot to things and come participate in the on-chain economy, but it'll just be in a different way. Blockbuster reinvented itself a few times, I think, before completely disappearing behind, folks like Netflix. But we've distilled institutional level scale into code, and we reward everybody with 100% of the value the platform creates. And that's difficult to compete with if you are on chain and building something that looks more like a traditional business. It's going to be near impossible for these institutions to compete with.
Yeah. And I do want to cover, which we've covered before on the show, but the revenue model and value accrual thesis that you guys have. But before we do, I'm just curious. One of the things that I've seen on the tokenized equities world, because it seems like everyone's sort of waking up to this at the same time, everyone's kind of got their derivative. And I'm seeing some fragmentation in the tokenized equity space. And, we've seen this before with stable coins. We've seen this with ETH when the Rollup centric roadmap was announced, and how, ETH on Optimism is not the same as ETH on, Arbitrum, and, wrapped versions of tokens and these sorts of things. We see, B stocks and D stocks and tokenized equity here and there. I think we're going to run into very similar user experience issues if we don't solve this early, if we end up with different varieties of tokenized equities spread across all of these different chains. Given that one of your primary things that you're thinking about here is coordinating liquidity across these different equities, we're primarily on Base right now, and Coinbase, and Base is kind of the primary launch partner chain there. But as these tokenized equities start to propagate across all of the chains, how do you think we should reconcile the fragmentation that we're seeing in tokenized equities these days?
Yeah. I mean, look, there is going to be an expansion moment here, right? Because everyone is going to want to win the race to be the definitive tokenized version of these real world assets on chain. And to date, we've seen an explosion, right? And I think some of these do have, various degrees of pros and cons. But, we've seen wrapped derivatives, we've seen debt securities, we've seen a bunch of different versions of these things. But these were like kind of the things that I think were largely like the betas, right? The early versions of these things. And I think what we've seen from Coinbase here is like a leapfrog moment, where they actually represent and hold these things, custody them, and issue them from a trust that conveys beneficial ownership, right, to people who use them. They have splits built into them. They've got dividends built into them. And I'm sure that Coinbase wants to continue to like bring even more of that full experience. So I think the market will probably consolidate faster than what we've seen from other types of expansions of different versions of different assets. But I would expect, kind of like the iPhone analogy, there was a lot of different versions of phones, smart or otherwise, and slowly it all started to consolidate around something that looked like the iPhone. And I think you'll see all of these versions forced to consolidate around something that looks more like what Coinbase has brought in these tokenized stocks, because if in 24 hours, they can grab, this much market share, other folks are going to have to react very quickly. But from our platform standpoint, we'll be going live with the all new Aero built on MetaDex 03 very, very soon. And our intention, right, is to be the dominant exchange layer across all of EVM. One of the aspects of that, right, whether it was the fragmentation of the chain experience or whether it's the fragmentation of the token experience, we want to abstract that all away from you. So if you are on mainnet Ethereum, maybe you've never even used Base, right? How do we make it very easy for you to find the best token or asset? Well, you just go to Aero, you look for tokenized Apple, you find it, and we take care of everything on the backside. Bridge over to Base, you don't have to worry about gas. We're going to give you the best execution on that asset, whether it's on Base, whether it's on another chain or things like that. So we will make discovery of these things very easy. I think that also helps to consolidate the market because it won't be fragmented about which version is on what chain and where are you. It's just going to be, hey, I've got a point of view. I want to buy this asset as fast as I can. I want the best execution. You only need to go to one place and we'll be sure to give it to you on the backside.
Incredible. And I think, this is a protocol that's in position to subsume so much volume as a result of just the onslaught of tokenized equities that we anticipate coming on chain. Can you walk us through the value accrual mechanism, the value flow? Let's say Aerodrome adds a couple billion in trading volume on the heels of tokenized equities. I think that's probably rather conservative, actually. How does that increase in volume translate into increased Aero? Meaning, this volume, creates fees and earnings for, liquidity providers, these sorts of things. Can you walk us through how the trading volume eventually transforms into, value accrual into the token?
Yeah. So to explain this, I would think like most people are familiar with the platform model, right? This is the classic sort of Web 2 model. And you could think about something like the Apple App Store, right? The Apple App Store says, hey, come launch a product on us. We are going to give you distribution to all of our users. And in exchange, we're going to ask for about a 25% cut of what you make. And Apple gets to do that, of course, right? Because their platform is one of the most valuable. And so whatever you gain in that distribution or access to those customers is likely going to be far in excess of the tax that they put on you. Now, we do see some folks on chain trying to move to this platform model where they are basically going to say, well, you can use our software, but we're going to take some degree of a fee on top of that, right? And we're going to use that to redistribute value to a different stakeholder or something like that. We believe that reintroducing that sort of platform economy like model, which is like if you go back and read, write, own, this is one of the big cases for Web3 and the things that we're going to create is that we weren't going to reintroduce these intermediaries or extraction layers. So we believe 100% of the platform's value should be redistributed to users of it. And we have encoded that since day one in immutable, unchanging code. So more fees on Aerodrome, more revenue streams on Aerodrome, 100% of that value gets redistributed right back to users of our token. Folks who take their Aero, stake it, and participate each week. Well, let me tell you about one of the really exciting things, because we've talked a lot about this and, Folks say it's complicated, but it shouldn't be too complicated. Arrow is a claim on 100% of our exchange's, revenue. That's how it can be used. But one of the most exciting aspects of V3 that we're going to introduce is this idea of predictive allocation. So you, as a staker of Arrow, you don't just have access, right, to claim the value that the platform creates, but you have the ability to allocate capital, and to allocate capital to markets that you believe will be productive. And the intersection here between tokenized real world assets trading 24/7 and this entirely new on-chain primitive of predictive allocation is really powerful. And we'll go right to that example of NVIDIA doing millions in volume, generating a ton of fees in weekend trading ahead of an earnings call. You could, for instance, as an S-Arrow allocator, direct Arrow rewards to that pool. You are essentially helping to build that market. Liquidity will flow into it. And if you are right that there's going to be a lot of volume, a lot of speculation, and a lot of activity, you can then earn back an asymmetric reward by having basically bet not on an outcome, but being bet on that market will be used, right? It'll be productive. There will be volatility. And so we see this as like a really cool new aspect of the combination of Coinbase tokenized stocks and predictive allocation is that, you as Robbie, if you think, hey, market's about to close and I think there needs to be a ton of liquidity on NVIDIA USDC because people are going to trade it like crazy. I don't have a point of view necessarily on if they're going to beat or miss earnings. I just think there's going to be a lot happening there. You can make that bet just like a prediction market. If you are right, you get an asymmetric reward. So you can see the way in which more activity will certainly lead to more value, but it also leads to this entirely new primitive and your ability to earn like outsized rewards in proportion to how right you are about where markets need to exist and the value they produce.
Incredible. And so you'd suggest that this is probably one of the best ways to utilize the Aerodrome platform is look at the markets out there. We know NVIDIA earnings are coming up. Some more of these tokenized equities are coming online. Be one of the early providers of the liquidity to make that market and reap the rewards in the form of the Aero token.
Yeah. I mean, I like to say, when I came on chain in 2021, 2022, I certainly tried my hand at trading, right? But I think I learned pretty early on, I'm not a particularly good trader. That's not where my edge comes in. But you're
a builder, Alex. You're a builder.
Well, I'm a builder, right? And I think the kind of bets I can make, right, are will people trade these things? Will people trade a lot of them? Is the pie going to shrink or is the pie going to grow? And the thing that I've loved, right, about, just myself being a locker of Arrow and having used this now for years is I just get to be, more or less directionally bullish on the idea that more assets are going to come on chain, more people are going to trade them. I'm going to use that token to allocate, capital and rewards to those markets. I'm going to earn back what those markets make. And for me, at least, that's a bit more of a cozy position than will this token go up? Will that project rug, and all that sort of stuff. I can just be long exchange on chain.
Yeah, incredible. Alex, thank you so much, man. I mean, incredible work. You guys are leading the charge. Tokenized equities, $100 trillion asset class. Aerodrome, one of the primary venues to trade tokenized equities now as a result of the partnership with Coinbase. Crushing on Base and crushing on all chains, including mainnet soon.
Soon. Yeah.
Awesome. Alex, thanks so much, man. I'm sure it's busy times, hectic over there at Aerodrome. So keep cooking, and we appreciate you coming on.
Thanks. Adios.
Absolutely. We'll see you again soon. Thanks, Alex. Very cool. Very cool. We're going to keep this show rocking and rolling. Big shout out to Alex. I mean, absolutely crushing. You guys know how important tokenized equities are to the thesis. And we anticipate that this is only going to continue. And yeah, I mean, look, Aerodrome is one of the primary benefactors here. We know that tokenized equities are benefiting as a result of they're benefiting from the legitimization of the industry. And so when you see the president of the United States, on stage giving press conferences with leaders of an industry, when you see the regulatory regimes, the financial regulators of the United States holding innovation advisory committees with industry leaders, that this is what we're calling the legitimization of the industry. That, the powers that be, the president, the regulators, they're basically putting their stamp of approval on this industry and on this technology and on the companies that are making up this industry. And they're basically saying, okay, this is fair game. You guys, everyone else who already has that stamp of approval, these guys are part of the team. These guys are now in the game. And so that's what we're seeing. And now that you have all these new entrants into the industry, all of these guys are now starting to work together, right? And that's where you start to get, the tokenized equities that end up on chain. It's not just this brokerage game anymore. There's new entrants in this game. Coinbase, Robinhood, Denari, these guys are tokenizing these things, but ultimately these things are going to just propagate. We know that you can't keep these things chained up. Capital wants to be free, it wants to be liquid, and it wants to move across all of these chains, and it will make its way into the applications and the protocols that ultimately leverage those assets to the highest utility. And I think Aerodrome does that. I think there's other very creative financial experiments that we're seeing in the tokenized equities world. I think Bitwise, they had a great announcement in which they're creating these automatic trading portfolios, almost basically like a vault, right? And we know that Bitwise is bullish on the vault complex. And now they came out with that product. And I think we're going to see equities, tokenized equities in those automated trading portfolios. And I think we're going to get yield strategies. Swap, earn, build was the slogan that Coinbase put into that launch announcement of these tokenized equities. And I think we're going to see these equities make their way into Aave. We're going to see them make their way into Morpho. We're going to see people borrow against these equities. People are going to generate yield from loaning out these equities, maintain exposure to them, right? All of these things are going to take place. And it's very cool because we ended up creating generalized infrastructure, general fintech that is applicable, not just to the crypto native tokens that we used to kind of bootstrap and experiment the technology. The technology and the infrastructure is actually compatible with the largest asset classes in the world, being the equities market. So very, very cool to see. I'm extremely pleased to have these guys in our corner. We're going to keep tracking all of the developments here in the fintech world, in the digital finance world, as finance moves on chain and is tokenized. And we're going to keep telling you guys who we believe is going to be the primary benefactor of all of these, the confluence of factors here, right? The macro liquidity environment, the legitimization of the industry, the build out of strategic verticals, perps, stable coins, vaults, prediction markets. Okay, we're going to continue to talk about who we believe are the leaders in each of these categories and how you can allocate to these leaders in order to outperform the baseline as we enter the pre-bull market phase. Investable token era is coming, and stick around because we have we're gonna talk about it here on the show. We're gonna make sure that you guys know everything you need to know. Got a couple more things that we're going to cover before we bring up our next guest, who I know you guys want to hear from, Zach Pandl from Grayscale. He's going to tell us about the Zcash ETF, and we're very, very excited to hear about it. But first, we've got a couple more things that we want to cover. Let's go ahead. Hasib had an interesting tweet here. You guys know that we've been covering this liquidity environment. Secretary Bessent had a liquidity supply announcement that he made around the treasury buyback programs that were typically done quarterly. They were very well forecast, off the run, normal buybacks. But now Bessent announced that they're going to double the size of these buybacks, and they're going to become a lot more instrumental to the bond market. And so this caught people off guard. This was ultimately what skyrocketed Bitcoin and some of the other hard money assets off the lows. Crypto in general responded. Overall, I think we're I mean, pretty much every asset is up double-digit percent, between 15 and 50% this week, across Hyperliquid, Zcash, and the like. Pump Fun up 60%, Sky 20%, Athena 80%, Lighter 47%, Aerodrome 33%, Bitcoin 22%. And so this liquidity announcement from the Treasury is obviously a big deal. Bessent is the one who made that announcement, but here's his former boss, Stanley Druckenmiller, who together, Bessent and Druckenmiller broke the Bank of England. Druckenmiller put together this thesis. I read it in the Wall Street Journal. I mean, it made sense overall, but it didn't really have too much of substance. Here's the image that we want to take a look at. 100% AI generated. And so now there's some debate on whether or not it matters. Who cares whether it's AI generated? As long as it's confirmed to be his words, right? Whether an AI helped him write it or not doesn't really matter. I mean, I guess, if it has your stamp of approval, it still kind of holds weight if your name holds weight. And so Stanley Druckenmiller certainly does, especially as he has had a former relationship with both Secretary Bessent and the Fed's Kevin Warsh. And so part of the thesis of this liquidity announcement from Bessent was that he is kind of putting pressure on Warsh to do a quantitative easing process on the short end of the bond curve. We'll see if that ends up happening. I'd imagine that Bessent and Warsh are actually a little bit tighter and work together a little bit more closely than people might think. So I don't really think that Bessent would try to pull a fast one on Kevin Warsh and catch him off guard into, adapting the Fed strategy. I think he probably telegraphed this and maybe even ran it by Kevin Warsh first. Don't know that for sure, but that's speculation. Whether or not this article is AI generated, I don't think is a question. It comes up as 100% AI generated. So it seems like Stanley Druckenmiller certainly does. I also read it, has a lot of that kind of, it's not this, it's that tone of voice. So I think it's definitely AI generated, but it definitely still holds weight. Why would Stanley Druckenmiller come out against his former coworker in Scott Bessent? Why would he do that? Well, he might have some interesting opinions. I would also think, this would have been material non-public information before it was announced. So you can't share inside information, with people that don't have access to it really easily like that. But I also would have thought that, maybe Scott Bessent is still in contact and in good graces with his former boss, Stanley Druckenmiller. Maybe he even ran this idea by Druckenmiller. I just think, just the surface level, Druckenmiller is against Scott Bessent's plan. Feels like there's a little bit more than meets the eye, right? And obviously we would have liked for there to be like this very, seamless coordination process, right? The smartest financial minds on earth, proven throughout history to have a successful track record, managing just, vast sums of money, would figure out what to do about the American economy, right? Kevin Warsh in charge of the Fed, Bessent in charge of the Treasury. They both worked for Druckenmiller. Like, they probably had a plan in which they were able to work their way through this. It just seems like maybe they didn't have as much of a plan, or at least Druckenmiller is not really on board with their plan. So it's very odd. Obviously, the AI-generated language is an extra wrinkle here. But how do we think this is going to play out in the coming days and weeks? We're going to see more sanctions on Iran. I think that certainly has an angle to this. We're going to see this Treasury buyback happen September 9th. It could be even bigger than what they announced. And then they also came out and they said they might tap the Treasury general account and drain that and put that liquidity into the open market. So there's a lot that the Treasury has signaled in terms of adding liquidity and rearranging the debt in recent times. Druckenmiller has come out against this. He said, look, that's not the way you should be doing this. Warsh, in order for this to really work and for them to run the economy hot, Warsh would have to comply. And he hasn't really shown that he's interested in doing that. In effect, he's actually said the opposite, that he doesn't want to add anything to the Federal Reserve's balance sheet in the short end. So we'll see. We'll see. We also know that the Fed conference in Jackson Hole is typically when the Fed chairman kind of comes out and indicates forward guidance one way or the other and kind of, lays out a strategy for the Federal Reserve. But Kevin Warsh has been against that too. So I kind of think that, the overall, money printer is about to fly thesis, that is sort of shifting, but we'll see how exactly it plays out. We might be at a local top as it pertains to the accommodative liquidity environment. And so the hard asset thesis, right, I think certainly still in effect, but we might see the revenue meta heat up again, right? It just kind of feels like, all right, things are cooling off, settling down a little bit. We're going to get through kind of the tariff nonsense on the heels of, Bessent's sanctions against Iran. China's retaliating, Canada's retaliating. So we're kind of working our way through these, short-term effects. And we're ultimately going to land ourselves in a place where, the anticipation is that we're going to get a lot more liquidity in this market. We're going to see how that plays out over the next couple of months, especially through midterms. So we're watching this closely, but certainly an interesting wrinkle that Druckenmiller's article came back as 100% AI generated. Let's keep going. We've got our next headline, which is a new entrance into the HIP-3 deployer game. Entropy.io is releasing the first liquid way to trade Anthropic. Anthropic, obviously private company. I was surprised that there wasn't an existing pre-IPO market. Anthropic is slated to do their IPO a little bit later this year, maybe in November. And we've seen pre-IPO markets on Hyperliquid already. And so I found it a little bit curious as to why there isn't already one for Anthropic, or at least not a liquid one. For far too long, frontier assets have only been accessible to a select few. We're going to bring them to the masses. Entropy.io raised 14 million and 40 million hype stake in order to get that ticker for Anthropic. And they're coming out announcing the raise and announcing that they have this Anthropic market going live, pre-IPO market. So that's what we're seeing here. So we'll see. We'll see if Entropy.io ends up doing what they say that they're going to do. I think they're also designing this with a new Oracle in mind. And, this is something that we are watching pretty intently because Trade XYZ has had a monopoly on the HIP-3 deployer market up till now. And so it's very cool to see this become more competitive. We had a good chat with the Paragon founder yesterday. Paragon also a player in the HIP-3 deployer space. Those guys just announced the 30-year and I believe the 2 and the 10-year bond markets on Hyperliquid. So House of All Finance getting built out and HIP-3 deployers are entering. So this is becoming a more competitive space. Everyone is coming for Trade XYZ's monopoly. So very cool to see Entropy.io and Paragon coming for that Trade XYZ spot. Let's keep going. We've got a couple more that we want to get through, I believe. And so we're going to bring our next guest on in just a moment. Zach Pandl is going to tell us about the Zcash ETF. We're going to bring him up in a minute. Before we do, let's give a quick shout out to our privacy partner. We're going to give a shout out to ZAMA. These guys are absolutely crushing. Remember that the legitimization of the industry is at the confluence of several facets. We know stable coins, we know tokenized equities, we know these are building out more assets on chain. We're also building out the AI and privacy narratives. AI is becoming the surveillance state. I mean, we know that data is becoming increasingly valuable. These companies are going after it. And we have, these flock cameras all over the country, probably all over the world very soon. Surveillance state is starting to encroach on our privacy. We can respond in a variety of ways. ZAMA is programmable privacy and Zcash is the hard asset. If you're looking for a barbell approach to this narrative, I mean, look no further than Zcash on the monetary premium side and ZAMA, ticker is ZAMA on the revenue side. All right, let's hit our last tweet. This is going to lead us into our segment with Zach Pandl because we've actually got a Pandl tweet that we're going to cover today. Low beta is the handle. And here's Zach talking about Zcash. Zcash can challenge Bitcoin's network effects. Zach always keeps these things very data driven. So I'm excited to talk to him. We're getting him ready in the back. Bitcoin is the dominant digital currency, greater than 90% market share, but financial privacy may be a must-have in the future age of AI. If correct, price of Zcash may still have significant upside. Read our research perspective below. Obviously, you guys have seen the rise of Zcash lately. It's hovering around $500 for a while, upwards of $800 today, hovering around that $800 mark. And so what he says here is that there is still significant upside remaining. Let's go ahead and scroll down a little bit so we can see this chart. The share of Bitcoin's market capitalization. Okay, price implied by potential share. So obviously, and we've seen calls for 0.1 Zcash to Bitcoin. Okay, the current is a 0.9%. Okay, 0.1 Zcash to Bitcoin would be 10%. All right, and this chart was obviously done when Bitcoin was around that 81K mark. Right, and so what we have here is not only a value proposition in terms of hard money assets, liquid, accommodative liquidity policy, but it's also the ratio between programmability and utility of an asset that is poised for the generation of privacy and AI surveillance that we believe we're headed into, and couple that with the accommodative macro liquidity policy, right? So we know that in general, right, with the announcements from the Treasury, with the money printer getting turned on, the deficit, all of these things, the only option is to grow our way out of it and print our way out of it. This is spurring a value proposition for hard money, scarce assets, right? Gold obviously fits into that, but also digital assets like Bitcoin and Zcash, right? And so this thesis, the theory of hard money, benefits Bitcoin and Zcash kind of very similarly, right? Bitcoin and Zcash are both in a position to benefit as a result of accommodative monetary policy. But when you look within hard assets and you're comparing Bitcoin and Zcash, the powers that be, Grayscale and others, are taking the position that there is still lots of room to run in the Zcash to Bitcoin ratio, right? And this is on the heels of maybe Bitcoin moving a little bit too slow in the quantum area, right? Zcash obviously taking a little bit more of a preemptive approach to making the protocol quantum resistant and quantum secure, right? Zcash has the lead on Bitcoin in that sense. And also Zcash has confidential transactions where Bitcoin doesn't. And so that is also creating this aspect where we could see a re-rating of Zcash to Bitcoin in terms of that ratio. And so with that being said, not only do you have this accommodative monetary and liquidity rate situation that benefits Bitcoin and Zcash equally, you also have the scales then tipped in favor of Zcash because it's got the confidential nature and it's got the quantum resistance. And I think those are two aspects that those who are Zlevers, those are believers in Zcash, that favor it over Bitcoin. And I think we're going to hear more from Zach in just a moment, but ultimately this is what we are anticipating, especially as we see more and more research coming out from Grayscale and others that is saying, hey, this is the way in which we expect this market to move, this ratio of Zcash to Bitcoin to move. And this is what we're watching. There's also, several, kind of famous, asset supporters that have kind of been around the block a couple of times that have supported Zcash. And, these guys have been in from the beginning as well. And, that adds another interesting wrinkle to the entire Zcash story. And so we're going to bring in Zach in just a moment. And we're going to bring him up on the stage. We're still getting him ready in the back. But it's very exciting. We've had Zach on the show several times, not always talking about Zcash, but oftentimes talking about the market broadly, talking about Bitcoin, ETH, the ratio between those two. Today, talking a little bit more between the ratio between Zcash and Bitcoin. Zach is head of research at Grayscale Investments. You guys know they just converted their Zcash trust into an ETF, so we're going to be talking about that. And so He's got plenty of great takes on reg crypto, SEC, regulation, clarity, all of these things. Today, the focus is on Zcash as they launch their ETF. So this is going to be our AI super cycle segment because we believe that a important piece of the Zcash thesis is the response to the AI surveillance state. So let's go ahead, play the little intro animation here. AI super cycle sponsored by Near, and we'll get in Zach Pandl of Grayscale.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
All right. We're live. We're here with Zach on big day. AI super cycle. The AI surveillance state continues, and Zcash is a response to that. We're going to get into the entire thesis with Zcash, but also the ETF that you guys converted from the trust. Zach, it's a pleasure to see you again. You've been on the show a couple of times. Welcome back.
Great to see you, Robbie. Awesome to be back. Huge day for Zcash. Delighted to share views on it.
Absolutely, and congratulations. So maybe let's start there, right? We'll get into all of the thesis around Zcash, why there's several market participants that are rallying around this. It does feel like it's a return to the original ethos that a lot of us came into this space with. But first, let's talk about the trust that is now an ETF. Grayscale has done this with previous products. Bitcoin was a trust, converted into an ETF, a couple others as well. Can you walk us through the mechanism and what transpired today to ultimately bring this Zcash ETF to market?
Absolutely. Very similar story to the Grayscale Bitcoin Trust, one of the first vehicles for getting regulated access to Bitcoin here in the United States. Look, Zcash itself is around 10 years old. The Grayscale Trust is around 9 years old. I think speaking to how closely this business has followed the ecosystem, the conviction in Zcash as a network, as an asset. So these products, they start out as basically closed-end vehicles, private placements for accredited investors, and uplisting them to ETFs makes them open-ended vehicles and greatly broadens the accessibility to many more investor types. And so we're delighted to be able to do that here with Zcash as we have with these other products. But the conviction, the thesis around the asset doesn't really change. This is about the value of decentralized digital currency, which Bitcoin demonstrated, but building on that vision with the critical element of financial privacy. I know we'll get into all that today, but we're delighted to be able to tell that story and share access to the Zcash ecosystem with many more investors in the form of the Zcash ETF.
Absolutely. And we've been following Zcash for quite a while. Near has been a partner of this show for quite a while as well. And Near Intents helped expand the ecosystem, and Zcash ultimately became an asset with utility. And I think that is what a lot of Bitcoiners might be a little bit disillusioned and fallen out of favor with as we've sort of started to notice this rotation from Bitcoin into Zcash because of two reasons primarily. And I'm curious if these resonate with you and kind of the institutional investor network that you're speaking to. This quantum resistance, Bitcoin tried, there was a movement to try to make Bitcoin a little bit more quantum secure. It has not transpired quite yet. Zcash has been a lot more fast-paced, a lot more proactive in making its protocol more quantum resistant and ultimately quantum secure. And the other being that Zcash does have confidential transactions and the ability to shield its transactions, and it gives that element of financial privacy. So quantum resistance and privacy, how important are those to the investment thesis for Zcash?
Look, I agree with all of that, Robbie. Bitcoin has many strengths, of course, and how I might frame it is that Bitcoin has first mover advantages in this space, the first decentralized digital currency, the first blockchain, and has tremendous network effects from that first mover advantage. But we would argue that Zcash has second mover advantages. It has particular strengths in areas that were not possible or less relevant when Bitcoin first took off. And that's what's required in order to challenge something with deep network effects like Bitcoin. And I think you articulated the case well. How I would put is number one, financial privacy. Number two is more active development for quantum readiness, to harden the blockchain against AI-powered attackers. And third is something that you touched on as well, which is cross-chain reach. We don't really need to have every merchant in the world except Zcash for this asset to serve as a private hub with kind of universal access. The magic of intense technology means that we can keep our assets in a shielded pool and have them reach anywhere, potentially with, say, stablecoin payments on Solana or on Ethereum. So financial privacy, the active development culture, and the cross-chain reach, to me, are really unique advantages that give Zcash a real shot of taking market share in and really competing against Bitcoin in this use case.
Yep, absolutely. And I want to highlight and double click on the second mover advantage that you pointed to. There was actually a friend of the show, Lorenzo, who kind of outlined that this is a phenomenon that we see across sectors. It's not just in kind of the hard money assets like you're pointing to with Bitcoin and Zcash, but also in several on-chain businesses. I would even say that we've seen this in the AI world as you see AI frontier model companies leapfrog one another. There is a second mover effect where once someone is out live in production, we can learn, stress test, and distill those models, and then you have the next best model ultimately leapfrog the one that was ahead. And so I'm curious how the second mover advantage ultimately transpires when it comes to the hard money assets, the scarce assets, the ones that we believe have monetary premium. You know, Zcash is in a position where you said it has more proactive development. We also saw that they went to, I believe it was Anthropic, and was able to get, one of the more advanced models, I believe it was Mythos, to stress test the system. Something that I believe one of the Winklevoss twins was suggesting that we should push for more in the CFTC advisory committee. And so Zcash has been on the frontier, of the industry for quite a long time. What do you see in this second mover advantage? We're already seeing quantum resistance and privacy at the forefront. What else do you anticipate coming out of the Zcash ecosystem in which it can further advance beyond Bitcoin in some of these more technical development areas?
Yeah, a lot of elements that we can touch on. How I would characterize it, Grayscale looks at the crypto asset class as a whole. There's so many different tokens, so many different types of blockchains with different use cases. And we're focused on the currencies category here. And in that category, today, Bitcoin is king. Bitcoin has more than 90% market share in the currencies category, the blockchains that are designed for the use case of sound money or hard money. Just like in other categories, there can be competition. In smart contracts, Ethereum was the first mover and has a lot of strengths and of course, a lot of attributes that we love about Ethereum. But there's room for some competition, room for other blockchains that are making different design choices and servicing users that have a different set of needs. I think Solana is a great example of that. Solana showed that there's a different set of choices that you can make and create a lot of value for users and ultimately value for the token. In the currencies category, we have lacked that competition. There really hasn't been as much dynamism and anything competing with Bitcoin in a head-to-head way in that same type of sense. I think the Zcash is an idea whose time has come. It is 10 years old, and these assets, these ideas have been, I'd say, being nurtured for a long time. But the time is now. The category is ripe for more competition, and we think Zcash is placed to take some market share. Now, just like in the smart contracts category, Ethereum is not going to go away and Bitcoin is not going to go away. And the competition probably will make Bitcoin stronger. just like the competition from Solana made Ethereum stronger. But today, we see Zcash's market share as just too small for the value that it's bringing. Just less than 1%, 0.9% of Bitcoin's market cap. It still seems to undervalue the properties of financial privacy and the other unique attributes that Zcash is bringing. So more competition to this category, more value placed on the unique proposition of financial privacy. That's how we think about the investment thesis.
Yeah. And you recognize the investment thesis very early on. What was the light bulb moment for the market? Was it, the frontier model companies just advancing, at such a rate? Or was it something else that ultimately was the catalyst for, after really 9 years of dormancy for Zcash to really start to take off and resonate with the market? What do you think was the real catalyst here?
It's a 1-2 punch of the risk of AI surveillance, and I think an awareness of the power of these tools and what it's going to mean for our lives. We're seeing that in the physical world with AI-powered cameras, and we're going to see that in the financial world with monitoring of transaction and labeling of address and all of those types of things. I think the other element is just the growing up of crypto, the maturing of public blockchain tech. And as we have started to enter traditional finance, as traditional institutional investors have explored blockchain technology, they immediately recognize that privacy is a missing element. It is obvious that public blockchain technology requires a privacy layer. And a very natural way to start investing in that thesis is at the most important use case of this technology and of these assets today, which is decentralized, scarce digital money. And so Bitcoin is the first element, in a way, of the crypto ecosystem that is getting its privacy layer. That category is getting the privacy layer. But we're going to see that privacy layer added to smart contract platforms, to stable coins and to tokenized assets and to DEXs. All of that's going to require privacy as well. So I think many eyes being opened from the power of AI technology, from the missing pieces of public blockchain technology as it grows up and it starts to enter big boy finance. Privacy becomes obvious, I think, and something that is clear to so many people. And that explains why we had such an explosive move in the price of Zcash at 19x or so since last year. I think that this is only the beginning for Zcash and only the beginning for privacy across our ecosystem.
Yeah, incredible. And, this has kind of had two major run-ups in Zcash. Obviously, the first was spurred by what you're talking about, the convergence of factors, the legitimization of the industry, quantum resistance, and privacy as a response to this. There was the Ironwood upgrade, which was an upgrade from the Orchard pool, in which, there was the Anthropic's Mythos models that ultimately looked at Zcash. It said, hey, we should make this upgrade. And they implemented this turnstile accounting that made sure that the upgrade went out without a hitch. And so now that seems to be behind us. Going forward, I'm curious because, you've put out research that talks about the ratio of Zcash to Bitcoin. What do you think the ratio of Zcash to Bitcoin to get to, and what do you think the catalysts for the increase are?
The question is, what is the value of financial privacy? Today, the market is valuing that at less than 1%. And that seems a surprisingly low number to me. I think it's very difficult to estimate exactly where we will land in terms of the value of this alternative technology. And I'm not going to give a price prediction here. But less than 1% seems an awfully low number from our viewpoint. And if investors are, thinking about how to do this scaling, just one benchmark that I would give, not a price prediction, is if Zcash were, say, 5% of Bitcoin's current market cap, that would put the price at the 4,000 to 4,500 level, roughly speaking, depending how long it takes to get there, and accounting for supply changes in the price of Zcash. So that's not a price prediction, but I think it does go to say that we've had a large move, a 19x move since last year. It has appreciated in value, of course, but at the kind of $800, $900 level, to my eye, we are still putting a surprisingly low price on the value of financial privacy.
Yeah, absolutely. I think 5% is probably conservative in that regard, and we're believers in the importance of privacy when it comes to finance and money, and in addition to scarce assets, right? Because that is also part of the thesis here. And this is one thing that we've seen. The macro liquidity environment has become accommodative, at least signaled by Treasury Bessent and these buybacks. And so we saw this explosion off the lows, and that drove Zcash higher in this latest move. But again, the ratio between these hard assets is still ripe for changing. Maybe you can walk us through a little bit more of the mechanics here, because Grayscale had the foresight to create these products. It was a closed-end trust early on. There was significant demand there. Now it's converted into an ETF. There was... and I'd like to maybe dispel some misconceptions here. There was one floating around that, these guys have been locked up for a long time in this trust. They're up a lot because of that foresight that Grayscale had. Now, with this open-ended ETF, they have the options of getting liquidity. Do you have any idea of how much of the assets in the trust are looking to exit via the ETF? Do you anticipate the demand for the ETF offsetting the potential exit in liquidity from the trust?
Yeah, it's a great question. Let me say a couple things about this topic. First off, this is a good reminder that this is not a brand new ETF. It's a 9-year-old investment access product, and investors that have been involved in the product from the beginning and throughout its history have experienced strong returns already in this product. As a result, there can be profit taking, certainly after big appreciations and around a certain level. That being said, we had very similar stories around the launch of the Bitcoin ETFs, that this was a kind of buy the rumor, sell the fact type of event in markets, and that proved to be dead wrong, of course. The ETFs were a moment for investors to get new liquidity, but they were the starting point of the rally in the price of Bitcoin in 2024. So I would be careful with this logic. We're very grateful to have provided value to many different types of investors for a long period of time, almost as long as the network has been around, and I can't predict the behavior of all of those investors. But I think that this is the beginning of something, not the end of something for Zcash and the Grayscale Zcash product, the Zcash ETF. And of course, the open-end structure does mean there can be inflows and outflows. That's a great advantage of this product. That means there's investor liquidity. That means it will very accurately track the price of the underlying token and work exactly as the other very successful crypto ETFs now available in the market.
Yeah, absolutely. And you mentioned this is a more flexible product. And actually, when I saw you were coming on the show, I wanted to ask you this because as far as TradFi guys go, you're extremely well versed in the likes of DeFi. And so I think it's helpful to understand someone's perspective when they can kind of see both worlds as these worlds collide. And so I understand the ETF is going to provide access to get exposure to the Zcash asset, that from those who may not have another venue in which they can get access. But a lot of the value of Zcash is its utility, its confidential nature in transactions, its quantum resistance, these sorts of things. We've spoken to leaders of the Zcash ecosystem in Mert, who's told us about the Tachyon upgrade that is coming to Zcash. And this is another primary upgrade in addition to Ironwood that went live a couple of weeks ago. And so when you're speaking to investors or prospective investors, how do you describe the ETF to them versus, buying this and utilizing the asset in its confidential nature? Is there a balance that, we can strike between these products? How do you reconcile this in your own, personal mind, given that a lot of the features of Zcash are available when it's on the blockchain?
Absolutely, and a very important question. How I would answer this is that the ETF is an excellent way to get investment exposure to the Zcash ecosystem and the ZEC token in the context of a broader portfolio, in the context of your brokerage account or tax advantaged account. That's what this product is designed for. But of course, with the ETF, you're not getting the full experience, if you will. And so I would not hesitate to encourage investors to look at the value of shielded technology. And I think that anyone that does this is certainly going to have their eyes opened to how important this technology is. We are not at Grayscale in the business of offering out wallets or access to shielded Zcash. The trust holds transparent and auditable Zcash in Coinbase custody like our other ETF products, and really designed for investment exposure. But I would absolutely encourage listeners to look at shielded Zcash. That is really where the value is coming from. And I think for people that haven't done that, they will have an eye-opening experience of how easy and effective the ZK technology is in providing fully decentralized, scarce, open source, private money. It's a really remarkable technological feat. So you're right, it's about striking a balance, one vehicle for investment exposure, one vehicle to give you really that fully private set of assets and transactions without a centralized intermediary.
Yeah, absolutely. And there's a couple more just mechanical things around this ETF. I think I saw it was a 2.5% fee associated with it. Maybe you can just round out some of the details around the ETF, anything else that you think investors should know as they're looking at this product, and how you think the market is going to react to this launch.
Yeah, that's right. The product has been around for 9 years, and the fee has been constant since the launch of the product. Investors have had a good experience and strong returns throughout that period of time. I would like to add that we have also committed for the first year of this ETF, taking 100% of the fee revenue and plowing it back into the Zcash ecosystem through education and other elements of support to support this product and to support Zcash. This is a real long-term commitment, a long-term conviction in the value of this network, the importance of these tools in our world today. And I think that context is important. When you think about the product beyond that, I would think about kind of broadening the access and broadening the toolkit. Like we have with other ETF products, I think you should expect the development of derivative markets around that, particularly options, structures for hedging, for adding yield-oriented strategies around Zcash. And because it is a high volatility asset, I think that some of those ideas will be quite compelling for certain types of investors. But the most important thing that I'd like to emphasize here, though, is that it's sort of a privacy imperative that gets us to this point. This is important technology in blockchains. It's important technology, we think, for people around the world to have the choice about what financial information they are disclosing out into the world. And Zcash is a very special piece of technology that gives people that autonomy, that choice to decide, are we going to disclose the value of our assets and the value of our transactions or not? It's a very powerful idea. I think an idea that's going to be increasingly important as AI reshapes our world. Our part is just to give straightforward, efficient investment access to this theme through Grayscale's products and to help support the ecosystem over time. We fully expect to do that.
Yeah. I mean, well said. And I think you guys are pros when it comes to launching these products. Like you said, this one has been around a long time. Now the conversion to the ETF, the 100% fees back into the ecosystem, I think is, just incredibly incentive aligned. We here at the Rollup, we pride ourselves on educational commentary on the space, and we're big fans of Zcash. So would love to put something together on that front. You know, there's one thing, Zach, that occurred to me as you were kind of describing this broad thesis here and how Grayscale is interacting with the space. And that's, you know, this AI side of the thesis for Zcash. You know, we've been talking about kind of the AI surveillance state as it is, and, you know, how Zcash is a response to this with financial privacy and taking that ownership into one's own hands. You know, the thing that occurs to me is that, you know, the agentic commerce and agentic economy is getting built out at the same time. And I can't help but think this is maybe a little bit far out, but, you know, these agents are going to need some form of money. And I have a feeling they are smart enough to also recognize the inflationary effects of the fiat system and stablecoins that a lot of us have also recognized. Agents also may value their privacy on behalf of their humans or not. And so do you think there's a thesis here or a vector in which Zcash could become the predominant form of money for agents and AI agents? Do you think that this is potentially realistic?
A lot of layers, but you know, I bring it back to near intents and how that's powering things today. You know, we're also big believers in near, and we're thrilled to see these two ecosystems come together to give such a convenient user experience with some of the Zcash wallet infrastructure today. To me, intense is what I expect an agent experience to feel like. I just want something to happen, and it happened.
Yeah.
Mechanics behind the scenes to how it is being powered. I think near intense working with Zcash is along the lines of where the agentic finance element is going to go. You know, agents are going to need privacy on working on our behalf in the same way that we are going to need privacy. I think Zcash can absolutely play that role, powered by additional tools like Intense.
Absolutely. Well, Zach, we really appreciate all of your hard work in pioneering this space and bringing it to investors at large. And we realize that it's exciting times and busy times. And so really, really appreciate you spending some of your time here today. We're big believers in this asset as a response to the surveillance state with all of the progression that AI is moving, and big believers in financial privacy as a whole. So thank you so much for spending some time with us here today and helping educate our audience around Zcash.
Thanks, Robbie. We'll see you soon.
Absolutely. Absolutely. See you soon, Zach. Guys, that's been AI Super Cycle powered by Near, and big shout out to Zach. We're going to keep this show moving along. And yeah, Zach, as always, rock solid. Big fan of his and big fan of Grayscale. Very cool to see this launch live. And we are continuing to spread the good word here on Zcash. Bitcoin Zcash ratio is poised for some movement. So Zcash holding right around that 800 level. Very cool to see. And that's been AI Super Cycle. So we're going to bring up our next guest here in just a moment. Our next guest is going to be Haonan from Codex. These guys are doing very cool things when it comes to Forex, on-chain, movements between stable coins and fiat, and generally, greasing the wheels here on the on-chain economy. And so let's go ahead, move off of AI Super Cycle here and get into our regularly scheduled programming. But I hope you guys enjoyed that segment with Zach from Grayscale. And so we're going to get into our regularly scheduled program with Haonan in just a moment. We can go ahead and take the top right little tag off. We'll keep things moving. Guys, don't, little, we got a whole team effort here behind the scenes. There we go. Now we're making some moves. I hope you guys enjoy the green tinge that's coming from the right side of the office here. That is the bullish forces. The red forces over here have been overtaken by the green plant. So we're actually green on both sides. I'm wearing a green watch. There's all kinds of things that are green happening in this office. And I hope you guys are rocking and rolling with us as always here today. Do a quick little check-in on the market. Quick little check-in on the market. Bitcoin 79 holding up nicely. Zcash under the 800 mark. I think we will probably get some very short-term selling on that ETF product as it was converted from that closed-end fund into the open-ended ETF. I think we might see some reactions as a result of that. But we're going to bring up Haonan in just a moment. You guys know him well. He's been on the show multiple times. He's following Zach Pandl from Grayscale with the ETF, the Zcash ETF conversion from the closed-end trust. And so we're going to get into a little bit more on the stablecoin Forex conversation. Like I said, you guys know Haonan well. He's been on the show multiple times. CEO of Codex, an Ethereum layer 2 built exclusively for stablecoins, went live in June 2025 with native USDC, raised 15 mil from Dragonfly, and Coinbase and Circle also in there. His bet is contrarian in a crowded field rather than chase transaction speed like Tempo, Arc, Plasma, and Stable. Codex is targeting the fiat to stablecoin FX boundary as the real bottleneck and pointedly refuses a retail token or airdrop. We know those opinions well. So it's always fun. Haonan's always got some contrarian beliefs. I'm excited to get into it. I see he's ready in the back. Let's go ahead, bring him up. Haonan, you're on the show live now. Welcome back, man. It's good to see you.
Hey, man. Good to see you. How have you been?
I've been good, man. I mean, tides have turned a little bit since we last saw you in the Empire State.
Yeah, I think everybody feels 50 IQ smarter. I don't know if that's true or not, but people feel it that way.
Great tweet last week from CMS was that we could feel the technology improving in real time. And like you're saying, we're getting smarter and better capital allocators in real time as well. Well, how have things been going on your end? What's the build been like? How's Codex doing?
We're doing great. We just passed about $1 billion monthly dollars of transaction volume. We're opening up new geographies to serve customers in.
There we go.
And things are firing on all cylinders.
Beautiful. Absolutely. And so take us through the story a little bit. I mean, what we're seeing is that, look, there's, a few verticals in which there's, primarily these few verticals are primarily benefiting from the legitimization of the industry. I'm sure you saw, industry leaders up there with President Trump shaking hands. Next day, the CFTC is up there, Innovation Advisory Committee. So the industry is getting legitimized, and it feels like stablecoins is one of those verticals where it's the primary benefactor of the legitimization of the industry. You're seeing this firsthand. What has it been like, just to see the build out from the highest levels of finance? How have you guys been receiving this?
Yeah, so I think what you're seeing is that people are regarding stablecoins more and more as cash equivalents. You have cash in a bank account, you got a stablecoin in an address. People are increasingly thinking of these as equivalent things. And as they think about them as equivalent things, more and more people are choosing to transact in them and save in them and so on and so forth. And so I think you're starting to see that our corner of this sort of edge case of global finance is becoming more and more part of the mainstream. And obviously at Codex, we want to dominate this particular niche of making sure that we're the best place for people to do FX transactions between fiat and stables. And we want to dominate this niche, and we think this niche will end up eating all of traditional commerce as well. And so that will produce one of the most important financial primitives of the 21st century.
Absolutely. And another thing we tend to say here on the show is that a dollar on chain tends to stay on chain. And so you guys are helping bring dollars as well as other, foreign exchange currencies on chain. And then they stay on chain from there, and they ultimately flow into the rest of the on chain economy. For anyone who's unfamiliar, maybe you could just remind everyone where Codex sits in the stablecoin flow, right? I'd imagine you're, towards the beginning, as you help facilitate fiat into stablecoins, but please remind our audience on where exactly Codex fits, and who are some of the customers that you help with stablecoins here.
Yeah, so we typically face payment service providers or fintechs. We're sort of a wholesale supplier of stablecoins to them. So think if you're somebody who needs, call it $500,000 of stablecoins at a time, we are the best people for you to call. We'll get that to you as cheaply and as quickly as possible, regardless of what kind of beginning currency you start in. And so that's kind of where we sit in the stack. Obviously, this is one step kind of removed from the end business that is using the stablecoins. But given all the sort of demand of this, that's sort of what's driving the kind of explosive growth we've been experiencing, about 55% month on month.
Yeah. And, we saw, Treasury Secretary Bessent talk about $3 trillion of stable coins was a target that he had for this administration. how have you seen this build out? Do you think we're on pace? Do you think we're underpacing this? And where do you think are the next asset classes and business segments that are ripe for stablecoin adoption?
Yeah, so I think Secretary Bessent is extremely prescient about what stablecoins are about to do to kind of global commerce. And I think it's kind of in American interest, and I guess as he runs Treasury, in his interest for stablecoins to continue to proliferate. Why is that? Well, stablecoins are backed, dollar stablecoins are backed by US Treasury notes. And so the more stablecoins there are, the more people are buying Treasury notes. Said in finance jargon, it's, stablecoin issuance is a structural buyer of US Treasuries that never goes away, right? And so this is great. It means that we can compress the borrowing costs of the United States while simultaneously offering financial services to people that are underserved in parts of the world by the traditional financial system. Everybody gets to win, I think, which is why you're seeing these numbers go up and to the right. I think stablecoins outstanding are actually flat this year so far, but all the volume data we've seen is that it continues to inflect. And I think what's driving that is that people are just using these instruments more, right? Not just as kind of as holding them in addresses.
Yeah. There was a big announcement from the Treasury that they're going to double the buybacks of the long end of the curve. And, the theory is that then they're going to sell a lot more shorter dated bills. And one of the ideas was that this would put pressure on Kevin Warsh and the Fed to absorb a lot of those bills. But do you think stablecoin issuing companies could be the ones to absorb a lot of those short dated bills, and the Fed, Kevin Warsh, doesn't really need to do any sort of quantitative easing in order to facilitate Bessent's strategy?
Yeah, I think that the sort of deliberations of Kevin Warsh are maybe a bit above my pay grade. But I can comment a bit about stablecoins being very hungry to buy more treasuries, right? So insofar as the United States government and the kind of relevant regulatory bodies continue to allow stablecoins to proliferate, they will get more and more of a structural bid for treasuries. It's just mechanical. We saw an op-ed in the Wall Street Journal today saying something along the lines of stablecoin issuance may be a driver of purchasing in treasuries. I mean, this is just too soft, right? It absolutely will drive the purchase of more treasuries. It's just mechanical. Anybody who works in the industry knows that one leads to the other.
Yeah. We've seen some pretty explosive moves off the lows as it pertains to, some of these tokens. You guys don't have a token out there live, but, there have been stablecoin companies, Athena and Sky, that have gotten pretty, really solid bids here off the lows. Do you think part of the reason why they've outperformed go on this recent move is because, this is primarily a macro liquidity story? The macro environment is becoming more accommodative, and within the, broad scope of on-chain businesses that are driving revenue and accruing value, the stablecoin segment of on-chain businesses are specifically well positioned to benefit from this liquidity story?
I think, liquidity flows can drive valuations and market prices, and certainly they've dominated sort of what is determining the marginal bidder of securities and tokens and so forth for the past decade or so. But I think it sure helps if there's a fundamental story. So I think the assets that we'll appreciate the most are ones that both combine a fundamental story as well as one that can kind of absorb the kind of flows-based benefit of these macro tailwinds. Yeah. And so I think stablecoins is like a narrative that's very easy to understand, right? It's a dollar on chain. It's clearly working. And so I think that's why you're seeing many of these instruments catch a bid.
Yeah. Yeah. Incredible. I mean, and it's not just the on-chain businesses, the revenue meta, as we call it, is one side of the barbell. There's obviously the hard money, scarce assets on the other side of the barbell, Bitcoin, Zcash, gold that are doing extremely well. Anything that you like here that is a little bit contrarian? I know you love bringing the contrarian takes here, Haonan. I'm just curious if there's anything that you think the market is a little bit wrong about these days.
I think some of the euphoria around the AI boom is starting to die down a little bit, and I think that's a correct adjustment. I think possibly one of my more controversial takes is it's not clear that Anthropic and OpenAI are particularly good businesses. These are incredibly capital-intensive businesses that have, marginal costs per serving each customer. And in a sense, it's not clear that they are just not some commodity layer wrapped around electricity. And as you see these kind of Chinese models continue to steal the frontier models very quickly and catch up, it's a bit like, it takes you about 6 months to build a plane, but the other guy can build the plane in 1 month and for 1/10 the price. Is it good to be in the plane business? Bit simplistic, but I think we'll look back on this period of time and it will remind us, I think, of the crypto L1 boom.
That I think is a very good comparison because, we obviously saw how the commoditization of block space and how that worked out. And there's been some winners, but by and large, the wide aperture and broad swath of these projects has kind of come back to earth a little bit. And so as Codex is building out more of this, stablecoin ecosystem, stablecoin stack, you guys have some recent partnerships with GSR and KRWQ. Actually spoke with the KRWQ guys recently. Big fans of Frax here as well. And we had Sam from Frax and KRWQ on the show at the same time. Just curious, what is the nature of the partnership between KRWQ and Codex? How are you guys working together to ultimately expand the footprint here for both Frax and Codex?
So we're always looking to work with more stablecoin partners. You can think of us as sort of every issuer's best friend in that we help them get folks into using their new stablecoin, converting between their stablecoin and other types of stablecoin. And so that's kind of generally the way we work with many folks in the ecosystem. We're stablecoin agnostic, right? We're willing to work with anybody. And the main job of us we see is kind of eliminating the fragmentation. So it's in the interest of many issuers to issue stablecoins, but users don't want to deal with so many of these different balances, and we want to delete the difference between all these different denominations.
So you still think it still makes sense for there to be a multi-stablecoin world? We're not just going to consolidate around a couple, but it requires protocols like Codex to help kind of make sense of this multi-stablecoin world.
I think so. Maybe a more provocative way of saying this is the person that wants another dollar stablecoin to exist the most is the issuer. The new issuer wants fervently for another stablecoin to exist. It's not clear that customers necessarily want more dollar stablecoins to exist. There are already a couple scaled alternatives that work reasonably well. And it creates a lot of these UX problems that we're able to come and help mitigate.
Yeah, very cool. All right, Haonan. I mean, this is kind of what we're seeing. There's a rise of stable chains as well. We've talked Tempo, Arc, Plasma, Stable. You guys have chosen to go against this route. Maybe you can just talk about what you expect to see of these protocols. Do you think they'll do well, or do you think they're going to fall to the same block space commoditization, alternative L1 trade that we're seeing play out?
I think there's smart folks working at that layer. I think our approach to this is listen to what the customer wants. And when the customer lists the sort of top 3 things that they're most worried about or that are most painful for them, we don't think those are addressable at the chain level. And we think those are actually liquidity or Forex issues. And so that's why we chose to build where we're choosing to build in the stack. And I think you're seeing the fruits of that approach so far. Sort of the volumes processed through Codex are significantly larger than even some of the most prominent stablecoin chains. And I think time will tell.
Yeah. I mean, you guys are doing hundreds of millions of dollars, which is very, very cool in volume. Another area that I've heard more conversation around in recent times has been the Forex market. I think some of these guys are doing this around the stablecoin Forex market where, it's kind of maybe one layer deeper into the ecosystem where they've already tokenized it and they're kind of providing liquidity, competitive rates between Euro stablecoins and US dollar stablecoins, for example. When you talk about Forex, I think you're talking about it one layer removed where it's even before these things are into stablecoins, and it's more like the foreign exchange in the fiat world, because once it lands on chain, it predominantly ends up landing in the US dollar denominated stablecoins. Maybe you can just help us understand what the progression has been of the Forex industry as stablecoins have gotten built out, tokenization has gotten built out. how is the Forex industry starting to enter this market?
Yeah, so the way we think about it is we don't care if it's an on-chain swap or an off-chain swap, if it involves fiat or stables. We don't really care. All we care about is how do we provide the cheapest and fastest experience to the customer. And so if the cheapest and fastest path is through another stablecoin, absolutely, we'll do it. If it's through some other means, we'll do those means. Whatever creates the best experience for the customer is what we'll do. And so we're totally agnostic. So there are some stablecoins today where actually the cheapest way to access that liquidity is on chain by a DEX or a DEX aggregator. These are mostly more fringe stablecoins. I think for mainstream stablecoins, that's not the case. And in those cases where it does make more sense, we will go through the on-chain version of it. Absolutely.
And do you have a couple of examples? Just curious, like when you say fringe stablecoins, I take it these are not US dollar denominated. What are a couple of routes that make sense where it's actually better execution to do it on chain than off chain?
Some of these are actually dollar denominated. And since I've applied the adjective fringe to them, maybe I won't name a specific coin. I don't want to offend anybody, but it's like for some of these stablecoin routes, it actually makes more sense to go on chain already. But for bulk, actually, it doesn't today, right? And so how we think about constructing the business is we need to prepare for a world where the on-chain routes are the most efficient routes, but not kind of blindly stumble into it before the conditions are ready. I think people talk about directional arrow of progress. It's very clear in the medium to long term that on-chain venues will be the deepest and cheapest, most liquid form of place to do FX. It is not the case today for most pairs. And so we got to be pragmatic about that. I think crypto has learned its lesson on being too ideological.
Yeah. And so one of the conversations we were having earlier in the show today was around tokenized equities and this announcement from Coinbase. And there was a tweet that the execution of, I believe it was Google on Aerodrome in this case, was beating execution price of Google on Interactive Brokers. And now this was during off-market hours, but it was actually, we all like to speculate that this would happen one day, but to see it one day after the launch of tokenized equities was pretty interesting to see. And so I'm just curious if you think that is going to start to be reflected in the Forex market as well, where, the best price, the best execution of doing a Forex swap is it's actually going to be better to do that swap on chain via stablecoins than it is in the Forex market. I mean, it took one day to do that, after this tokenized equities announcement. How long and how far away do you think we are from doing this in the Forex market on chain?
We think that world will come, and we think that's a really beautiful business to actually be in, right? Because you don't have to deal with any of the fiat gunk. You just kind of sit there and be the most liquid venue of these stablecoin swaps. It's fantastic. I can't think of a more elegant or profitable business than that. I think some of the blockers that are facing us before we get there are quality issuers of non-dollar stablecoins. Again, no names, but in many places, the issuers of these non-dollar stablecoins are not all that reliable. They don't have particularly good banking rails, and they're not really viable partners to work with. I think we're starting to see the rise of a new set of issuers for these non-dollar stablecoins that are quality partners. These are, banks and other viable financial institutions that want to get in on this game. And so I think once you see those blockers unlock and there's enough liquidity formation, I think you will see all this stuff shift over to on-chain rails.
Makes sense. Is there any particular currencies that you're just hungry for? You see the demand is there, but you just don't see a viable issuer. What are the currencies that come to mind?
Maybe I won't name specific countries given my remarks before, but I think there's maybe I'll focus on the good stuff, right? Like I think there's a lot of interesting stuff happening in Asia, in Hong Kong, Korea. I think there's some new issuers coming out that are really interesting.
Very cool. Awesome. Well, Haonan, didn't mean to put you on the spot there, but appreciate your takes as always. You're doing great work there in the stablecoin space. And it's like I said, it's a segment that we believe is well positioned to be a primary benefactor of the legitimization of the entire industry. So kudos to you for recognizing that. And thanks so much for spending the time today, man.
Thanks, Robbie. Good to see you. See you in New York.
Yeah, likewise. See you in New York, man. Catch you soon. All right. That's it, guys. Haonan was our last but certainly not least, guest for today's show. And so, I mean, you guys heard from Haonan on the stablecoin world, Zach Pandl on the Grayscale Zcash ETF side, Alex on the Aerodrome tokenized equity side. Like, I mean, guys, this is, you know, this show today is an indication of where the industry is headed, right? It's stablecoins. It's traditional finance getting into hard assets via ETFs, right? And then ultimately it is the build out of those assets on chain and the propagation of those funds on chain. It is tokenized equities and it is shared liquidity protocols, right? And coordinated liquidity that is ultimately providing best execution of those equities on chain, better than some of those off-chain brokerages that have been servicing this industry, the equities industry, for decades. On chain in its first day is starting to beat price execution of those asset classes. So incredible things happening. You guys see it. We see it. We all see it together. It is the legitimization of the industry, and it is the tokenization super cycle that all of these sectors are benefiting from. And we are going to make sure that you are a primary benefactor of this adoption as well. Continue to tune in, day out. We're going to be here. We want you guys to be here along with us. And we're going to tell you guys everything that you need to know for outperformance. So we'll be here same time tomorrow. We've got another great lineup, and we will see you guys there. Don't go anywhere. We'll be right back tomorrow on the Rollup. Peace, guys.